Imagine buying your first multifamily or commercial property and Uncle Sam hands over to you thousands of dollars to make it even more profitable. That's the power of Trump's One Big Beautiful Bill, a 2025 tax bill passed already in Congress, now in effect today. So if you are an aspiring or new or beginner multifamily commercial property investor, this video is for you. If you own just one rental property, this video will save you thousands of dollars, okay? So this 2025 tax bill is for the person, hopefully that's you, that wants to lower your taxes, okay? And I'm talking taxes from your job, right? And also on your rental income property. And then also boost your cash flow personally and your cash flow on your property. And lastly, if you just want to keep more money in your pocket and pay Uncle Sam less, you need to watch this video. So in this video, I'm going to break down very simply. I am not going to use any CPA or accounting jargon in this video, okay? And I'm going to give you real deal examples. This is something no other video on YouTube does right now to explain the benefits of this tax bill. I'm going to use real estate examples to show you how you can save money too. Got it? All right. If you have any questions along the way, you can text me real time. Text it to Peter to 833-942-4516 and I'll get right back at you. Let's get started. All right, before we get started, let me break down to you what the Big Beautiful Bill is, okay? This is my 1-minute description. All right, it all started out in 2017. Trump had an idea of giving businesses and real estate investors huge breaks to bump up the economy. He called it the Tax Cuts and Jobs Act of 2017. It was basically a tax law reform, okay? Again, it gave huge breaks to real estate investors and business owners. Okay, but they were set to expire by the end of 2017. This was all going to kind of fizzle away. Okay, for the most part. So in 2025, Trump developed the Big Beautiful Bill. Okay, and it passed. And what it does, it makes the 2017 bill permanent. Okay, plus there's extras in it I'm going to share with you today, and these extras are the ones that's going to slash the taxes, your taxes, and supercharge cash flow. Got it? All right, that was my quick explanation. Let's dig down into a few examples. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. All right, here is benefit number one, and that is a permanent 100% bonus depreciation. What is that? Okay, well, I produced a video dedicated to this topic, and the link will appear on the screen. It's called Cost Segregation Made Simple. So bonus depreciation is a cost segregation study, and what it's going to do is help you save money by rapidly writing off the parts of your property. Okay, so that video explains it to you. I am going to do now like a really simple explanation using a real property. Okay, so pay attention. All right, so let's say we have a 20-unit apartment building, okay, and you bought it for $3 million. Okay, use it just to pick that example. And for tax purposes, the IRS will say 70% of the $3 million is the property value and the 30% is the land value, okay? So the property, so 70% of $3 million is $2.1 million. So for tax purposes, we have a $2.1 million property valuation. Okay, so typically your CPA can write off the depreciation of your property, okay? And how it's calculated is they take the $2.1 million property value, okay, and they can write it off over 27 and a half years. So 2.1 million divided by 27 and a half years is $76,000 per year. So you can write off, okay, $76,000 per year. That's pretty huge, right? That's the awesome benefit of owning commercial real estate. Where else can you write off $76,000 a year? Just amazing, right? However, bonus depreciation supercharges it, okay? Almost 10 times. Watch this. Okay, So remember, we have this $2.1 million property value, okay? So this is called bonus depreciation write-off. This was a typical depreciation write-off. Here, we're gonna do a cost segregation on the study. And again, what a cost segregation is we can accelerate the depreciation of the components of the property, meaning that we can write off all the appliances in my 20-unit property, okay? So I can write off 20 stoves, 20 refrigerators, 20 sets of carpets, 20 HVACs, 20 air conditioners, 20 sets of drapes, 20 sets of windows. I can write off the landscaping. I can write off the sidewalks. I can write off everything in this cost segregation study. Okay, so in a typical, I'll be conservative, in a typical 20 unit, $3 million property, your cost segregation savings will be about $600,000, okay, in write-offs, okay? So guess what? You can write off $600,000, okay, in the first year. In 2025, you can write off $600,000. That's amazing. Over here, you can write off $76,000. So this new tax bill has made this permanent. So you can do this every single year and it doesn't fade out, okay, like it did previously since 2017. This is now permanent. This is huge, huge, okay? And what's it going to do is this is going to erase taxes that you owe, okay, potentially that you owe on your job, on your rental income. And if you sell, let's say you sell a property and you have a large capital gains taxes to pay, guess what? You won't pay it because you're going to have $600,000 in write-offs. Okay, one of the most amazing things people don't tell you about is you can also bank these savings if you don't have enough to write off, right? So what if you only had $100,000 in taxes or profits you need to write off, okay? And you have $500,000 left over. You can save it for future years when you either sell properties or you have other taxable events. You can use this savings from this one property to have write-offs for years down the road. This is huge. Okay, this is huge, ladies and gentlemen. It's going to change the market. It's going to have people come into the market and want to do deals because now, if you are a high-earning professional and you want to have huge tax write-offs, let's say you are a doctor, all right, and you buy this property here, and your wife doesn't work, you can make your wife your real estate professional and get unlimited tax write-offs, including this year. Okay, so just amazing benefits here on making this permanent. Got it? All right. So that's benefit number one. That's the biggest one. Let's go to benefit number two. All right, here is benefit number two. Okay, and it's a really cool one that was not permanent until this bill passed. Okay, so now we have the permanent 20% small business tax deduction, also known as QBI, which is called qualified business income. Okay, so to make a long story short and put it in layman's terms, here's how I look at it. This is like Uncle Sam saying, "Thank you, Peter, for buying this rental property. Now here's a 20% off coupon for your taxes." Okay, that's what it is. Let me explain to you how it works. Okay, so let's use student Kevin. He bought a small multifamily property. Let's say he nets $50,000 a year in income, okay, on the property, and Kevin has a job, okay, and on this job he makes $140,000 a year, okay. So combine his rental income and his job income, it's a total income of $190,000 per year, okay. Follow me there, okay. Now with this QBI, we're going to calculate the QBI deduction, okay? His 20% off coupon, okay? My barber calls this free money, okay? And it's so basically how you calculate it is you take the $50,000 off in qualified business income, okay? 50,000 and you multiply by 20%, that's $10,000. This is your deduction, okay? You get this every year on this property. Now, the second thing you have to do, you have to check if Kevin is qualified. If Kevin had a much larger salary, W-2 income, he probably wouldn't qualify, he would phase out. But Kevin has a decent salary. So yes, Kevin qualifies because if Kevin's income combined with the rental income and job exceeded $197,000, he couldn't take the full 20%. But in this case, he makes $190,000 combined, so he can take the entire 20% coupon. Okay, use the whole coupon. So his new taxable income becomes this $190,000 minus the $10,000. So his taxable income now is only $180,000. Again, my barber calls this free money. So it's a 20% off coupon. Okay, that's what it is. Okay, just by saying thank you for buying this property, here's the coupon. Use it. Okay, so it's available for you. This is now permanent. Okay, and it's going to make a huge difference in this economy down the road. We're starting today and down the road. It's going to entice more people to get into business because they can take this immediate 20% discount. Okay, all right, that's benefit number 2. Let's go to number 3. The best time to invest in real estate is always 5 years ago. The next best time is today. Let us mentor you so you can get started investing right now. Click the top corner. All right, here are the last 2 benefits. There are more, but these are the last 2 large ones, I would say, that are complete game changers that we didn't have before this bill passed. Okay, all right, so benefit number 3 is called the increased Section 179 expensing $2.5 million cap. I told you I wouldn't bore you with all the CPA jargon, so forget about that title. Here's what it means. Okay, so let's say you bought a 12-unit apartment building and you spent $150,000, okay, on these qualified items: new appliances, flooring, furniture, okay? And then, in the past, when you bought these things, you can write them off or depreciate them over, like, say, 7 years, right? But with the new Section 179 that just passed in July, it allows you to write off the entire $150,000 this year, okay? Not spread out over 7 years, okay? So, so you can write off in 1 year this year instead of depreciating it over 5 to 7 years. This is huge. This is going to cause a lot of people to want to get into renovating their apartments, causing an economy to go up. But for you, this is huge tax savings, okay? Huge tax savings. All right. The benefit number 4 is called favorable Section 163J interest deduction rules. Wow, so many words, right? Here's what this really means, okay? So let's say you have a property loan, and then you can write off the interest expense on your investment property, right? So let's say you have a $100,000 in interest expense on your property loans in 1 year, okay? So with the old rules, you could not write off the entire $100,000, okay? Only a portion of it, okay? Not the entire $100,000. The new rule, okay, from the big beautiful bill says you can write off the entire $100,000, okay? And for us commercial real estate investors, this is huge. Okay, so before we couldn't take advantage of this whole thing. Now we can in 1 year and not have to use it in future years. So we can take it in 1 year now. Okay, so I hope you can see now that this one big beautiful bill is a game changer for commercial real estate and multifamily property investors. You just have to get in the game. You can experience all this and do life-changing things to your financial future. Okay, got it? All right. I hope you liked this video. If you were with me this long, you are my favorite viewer. So do me a favor, go ahead and like the video. I appreciate you so much, and I'll see you at the next video. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my protege program right here.